So I've been planning to make a video on CloudMD's revenue and bottom line projections for 2023 and 2024. I've decided I need to see a bit more data for 2024 projections, but these are my numbers for CloudMD for their Q3 earnings coming up shortly and what I'm expecting from Q4. So I'm going to go through, these are my top and bottom line numbers. I'm going to go through what I'm expecting for revenue and why, and then the indirect expenses and operating gain and loss. And then finally, I'll go through the bottom line. So looking at revenue projections, looking at health and wellness services, they're talking about, they signed some contracts in Q2, expecting a 0.6 increase in revenue per quarter. On the Investor Day presentation that they did, they're kind of asked about how quickly these contracts turn into signed money being delivered contracts. They said they're trying to get it down to 15 days, but it's really up to the new company. Cloud can do it pretty quick. So it's hard to know how quickly this will happen. They talked about in their Q2 MD&A of sort of unlocking 10% growth. And then on Investor Day, the CEO talked about this company switching to a growth company with sort of a 15% growth target. So for health and wellness services, with their previous announcements, I'm sort of targeting about a 3.5% quarter-over-quarter revenue growth, kind of nice and stable. In the health and productivity solutions, this remote patient monitoring is a big deal, and this is more of a ramp. So they talked about increased revenue of $3 to $4 million per quarter, not per year, and I'm taking an extra quarter or so for this to actually come in. So as you'll see shortly, I just kind of guesstimated what it will look like between now and sort of a few quarters into the future. The best part of Investor Day for me was when Nathan Lane was talking about this remote patient monitoring business and the HPS business in general. He talked about that business having a 40% margin going forward and around 20% EBITDA, and that they had an annual contract value currently of $20 million per year. So this part of the business that was shrinking is going to be very important and will certainly help them get to that overall 40% margins, and they're already at 38%. So for next year, I'm going to be modeling for 40% margins. So what this looks like in terms of my revenue model, the sort of greeny blue, the blue is, in their financial statements. And then I'm going out sort of an extra quarter or so for $3.5 million in revenue per quarter. So a bit of a guess on the 2.2. I kind of went a little slower in the first few quarters and then sort of ramp up a bit more quickly. Around 0.8 million and then 0.9 and then eventually $1 million per quarter increase. And then from the Q2 2024, I'm using, again, about a 3.5% per quarter growth rate. Again, Investor Day talking about them being a growth company, and their number was 15% sort of ish growth. So that's where my revenues numbers come from. So you add the two divisions together, you get their overall revenue. Cost of sales is just working backwards from margin. I think I'm being conservative with the 32, or 38, and hopefully they grow to the 40% they've talked about earlier this year by the end of quarter four. So again, the margins back create the cost of sales and the gross profit. So I guess my number would be about $9.5 million in gross profit in Q3. So let's look at the expenses and then head towards the bottom line. So these are all the expenses I'll go through, and I'm going to flip through them pretty quickly. And the summary is they talk about them decreasing, but I don't think there's much cost optimization left, and there's not enough money in tweaking for me to really change the bottom line. So I'm largely keeping things the same, and I'll just comment quickly on the things that I'm not. So sales and marketing has been decreasing, but I'm going to pretty much keep sales and marketing constant over the next 2 quarters. R&D, again, pretty much staying the same. They are talking about some investments in Kia, so I kept that the same. G&A, they're still trying to optimize, but I think the focus has switched from optimization to revenue growth and profitability. So I'm slightly decreasing G&M. That's about the only one I'm slightly decreasing. Depreciation, amortization, share-based, keeping the same. Acquisitions, they haven't made any acquisitions in the last 12 quarters, so I'm hoping this one is really going to fall off, but I really don't know how quickly. So I've kept it fairly high, but I'm hoping I'm wrong, and I'm kind of doing this, and I'm hoping it's going to sort of roll off more quickly, and that this will really help the EBITDA, not adjusted EBITDA, but their actual earnings as the restructuring and acquisition costs go away, and when they get rid of all their non-core businesses. Change in fair value, again, not tweaking that. We do have this new line in Q2 financial statements of contingent liability. I'm assuming it's a 1 quarter sort of one-off thing with sort of the decision of the arbitrator that they talk about. So I'm putting it back to nil in the next 2 quarters. So that's the main thing different from quarter 2. Financing costs, not doing much of a change there. Last, in terms of their non-core loss, the U.S. E&M electronic medical records business is sold, so that's gone. But they're still stuck with Vision Pros. That is just burning cash. They had nothing to update on Investor Day, other than they don't expect to get any meaningful amount of cash for it. So I'm not sure what that means, but it's not going to be $10 or $20 million, because that would clearly change their cash. If they got, I have no idea what, but I assume a few million for it. But more importantly, it'll stop the bleeding of using up cash to support this business. So I'm a little concerned how bad the loss could be. I increased the loss a little bit, but I'm scared it's going to continue to increase. This is obviously not a business they're going to be putting a lot of cash into. And they talk about how much investment it's going to take to grow Vision Pros. So that kind of gets us to the bottom line. So we have my Q2 revenues, that top line gross profit of $9.5 million. Most of these expenses I'm just keeping the same. These originally were modeled off Q1 with tweaked for Q2. So fairly the same. Acquisition related, this is the one I'm not sure how quickly it'll fall, so I'm hoping I'm high. And then I just took out I'm assuming this is a one-time item. So that gets me to a net gain or loss from continued operations of a loss of a little over $4.5 million. This I fear is low. I'm assuming this is going to be just Vision Pros. And it's definitely there for Q3, and it's not sold yet. So it'll probably stay. This probably won't decrease in Q4. So total net loss of $6.5 million, adjusted EBITDA of about 2.5 of a loss. EBITDA of 2.5-ish, and a loss of a very small amount. So they've always talked about it being adjusted EBITDA positive in Q4, and with a bit more revenue, that's what my numbers are also showing. So with slight tweaks, they could actually come out positive in Q3, but it makes sense they wouldn't want to say this if they weren't sure and if they were going to come out with a slight loss. So we'll be, close to zero here. I tried not to be biased, so I did all my numbers and didn't sort of back calculate from a adjusted EBITDA positive Q4. This is just what the numbers came out to. So these are my projections. It's sort of a fun game to see how close they will be. Hopefully you find my analysis informative. Once I get Q3 actual numbers, I'll feel a little bit better about making my 2024 projections. Again, some of the lines, this is something I have too much uncertainty modeling out a year from now. But one thing that makes me positive, if you look at the EBITDA, not adjusting it, and if this acquisition related eventually sort of heads to zero and the Vision Pros is sold, that's, $2.5 million of losses. That would sort of clean up and make them not adjusted EBITDA positive, but just EBITDA positive. And that did come up a little bit on Investor Day of what would they do? What would the focus of the company be if they were generating cash? There really wasn't an answer, and I don't blame them. They're not quite ready to give an answer to that. A few other things on Investor Day, asking why management hadn't bought shares yet, and talking about being, prevented with all the sort of, with being limited with releases, and I guess it's trying to sell Vision Pros. You can't be buying shares when you're trying to sell parts of the company. So eventually, hopefully, the insiders will be able to buy in the near future. It took me a while to get around to listening to Investor Day. But again, listening to Nathan Lane's part, he was somewhere around half an hour or 40 minutes into the video talking about the remote patient monitoring. That's the part that I found most interesting. The rest of it was just sort of minor tidbits that I got out of the rest. It was an hour and a half video. So I'll find out next week how I did and what's next for me. Hopefully I'll have time, and it'll be worth making a Q3 video. And then I might need a month or so, but then to finalize my Q4 numbers. I have all my top line numbers are kind of set for 2024, but not the bottom line. So please, if you did find this informative, I appreciate when people like the videos, and I kind of look at ones and try to learn from which ones are more, people find more beneficial, and try to improve the quality of what I make.